Welcome back, traders. In the past few instructional video series, we looked at the steps that we undertake as a workflow process, having completed the design of a strategy, which is used to undertake optimization, iteration, and produce results that, when compiled together, produce the best risk-adjusted return we can over a test series. So in this particular video, which is part 4 of the instructional series, we now move, following the iteration process, to the final stages of the workflow, which is the undertaking of the backtesting of the solutions that have been identified and generated during the optimization and iteration process. So what we do at the tail end of the iteration process, which you'll see in the prior video, we are left with a file, a Donkian file, which includes 5 important files generated from both the optimization process, these 3 files here, and then the iteration process, these 2 files here. So before we commence the backtesting, we need once again to relocate this subdirectory into another target directory. To do that, we select File, Open Data Folder, and now this brings up the tester subdirectory, which is located in this subdirectory called tester. We need to locate it within the files subdirectory of the tester subdirectory. And now what we want to do is drag and drop the DON subdirectory into this new target location, just like that. Now that that's occurred, we can close down these files here, and now we need to move back to the strategy tester module. So select View, Strategy Tester. Now we want to use the third EA, which is provided in your download series, called the Trader. So the ATS DON Trader 200225. We select that as the algorithm that we wish to trade, and we make sure that we're using the correct market, which in this instance we've been testing Euro USD. We set the date range, which for the purposes of this exercise is from 2000 through to the end of 2019. We want to run this on visual mode so we can see the trades plot out as they occur through a walkthrough demonstration. So we click that, we slow it down a bit. Over here we make sure that we're using the daily period, we're using the correct spread, so once again we're using double the spread of the current spread. So Euro USD is sitting around 11 or 12, so we'll use a spread of 22. And with the expert properties, there's not much here, just make sure that you're using the correct initial deposit of $100,000, and in the inputs file just make sure that your trade risk is $500 per trade risk. Once again, you need to apply your password that you are provided with on the forum into this section for this algorithm to work. So now we select OK and we start the program. Now in the visualization mode, we just check that the EAs are performing as designed, making sure that the trails are working. In this case we have 5 separate EAs in our selected iterations, which produce the optimal risk-adjusted return, and as it's flowing through now, there don't seem to be any significant problems with the design or the execution of the EAs. We'll now speed things up a bit. We'll plot the equity curve as we're following along with the walkthrough. Trails all seem to be nicely activating. We're getting some very nice trending periods, a lot of stagnation, but when things start to move and trend, we get some very nice long trades. all seems to be very much in order as a fairly stable, robust trend following system. The equity curve has periods of stagnation with these strong step-up periods when markets are trending. Unfortunately, we can't dictate terms to the markets, so unless markets are trending, we tend to get these flat, stagnant periods. The green floating equity, as discussed before, always sits above the realised balance, which indicates that this strategy has strong positive skew. We're not warehousing risk. Over the course of time, over the longer term time frames, we see a visual reduction in the overall volatility and more the ascending linear regression of the overall positive expectancy expressed by the system, but at the short-term timescales, it's highly volatile. We've gone through a fairly extended period of stagnation with a deterioration, a slight deterioration in the overall equity balance, but now, given this great move back in 2014, we had this significant step up once again from those lovely short trades. And because this is a multi-trader with 5 strategies, we took significant advantage of that trending condition. So everything seems to be going in accordance with what we planned. So we'll just quickly finish things off. So now the backtest has run for the entire 20-year duration, and we'll have a quick look at the report. We get a very nice profit factor. We just check our average wins to our average losses. So our average wins are sitting at $1,596 with our average loss trade at $428. Now, considering our trade risk was $500, that fits within our expectations, that average loss. So everything seems okay here. So this now has performed the backtest component of the workflow process, and now what we do is we go to the back of the system and look at those files again. So we go to Open Data Folder, and we bring the data folder onto our screen in the tester subdirectory, and we just have a look at the files. Now, when we conduct our backtest, an additional 2 files are created called Portfolio Equity and Portfolio Performance. Now, what we quickly do is we have a look at the MAR ratio generated through our iteration process, and in this case our MAR ratio is coming out at 0.4736. So the first thing we check in our portfolio performance is that we are close to that figure. So when we come to the MAR ratio, we see it's 0.4759. That is not materially significant, so we're happy that the strategy has actually performed in its backtest in accordance with what the iteration result produced. With this performance file, we can see that we had a date range from 2000 through to 2019. We're on the D1 time frame. That's our total net profit. Our number of trades with our 5 strategies operating was 198 trades over the period. Our compound annual growth rate, maximum drawdown in dollars and maximum drawdown in percent, and our MAR ratio. We look at the cost structure just to make sure it's logical, and we can see that there's been a spread cost of $1,094, which eats into our gross profit. And a swap cost, a negative swap cost of $8,619. This is fairly high because this has a very long holding period per trade. We look at our probability of a win. So in this instance, our selection produces about a 43% win rate, average win, average loss, and we have a very strong positive skew with this particular system. So all looks good there. So then we close that file and we have a look at our portfolio equity file, which is used for our analytics, and all we have is the market price in column C on a per monthly basis over the entire backtest, and the floating equity in column D on a per month basis for the entire backtest. So they're the additional 2 files generated in this process, and this is the end of the workflow process. In our next instructional video, we'll start validating the results and ensuring that they're not curve fit and they're within our expectations. And so that brings this particular instructional video to an end as the tail end of the workflow process. So thanks for watching, and catch you very shortly. Bye.